A very good afternoon, sir.
Very good afternoon, Dev.
In the first part of our anti-dumping webinar, we had laid a foundation by exploring the concept of dumping and its impact on international trade. We talked about what anti-dumping means, why is it used as a measure to create a level playing field for domestic industries, and how duties are calculated based on difference between the normal value and the export price of the product. We had also discussed about PUC, or the product under consideration, which during an investigation. So, but I had one question. Uh, in a very layman's perspective, sir, if I am to ask you, uh, why anti-dumping duty? Because why I ask this is because, sir, we have customs. We can uh, anyway raise our custom if not impose anti-dumping duty directly. So why is it necessary, or why is anti-dumping duty only imposed and instead the custom rates are not raised?
Okay. So to answer your question, let me first of all clarify that this anti-dumping duty is nothing but a customs duty. So the notification is issued under the Customs Act only. Once you see the determination of injury or whether there is a injury to the domestic industry is there or not with respect to dumping. Dumping means, as I already explained, that a particular country is exporting its product at a value lesser than its normal price. So, for example, China, suppose in their own market, a particular item is being sold at say 60 rupees or 70 rupees. Sorry, at 100 rupees. But the same item, when they are exporting, because of the subsidy which they get from the government of China, or in order to take control of the global market, whereby they eliminate the ability to manufacture by continuously selling their product at a less than normal price. For example, I tell you the real example of fan. Most of the fans which we have today, whether it is a Polar brand or any other brand, they get it manufactured in China because China consistently dumped their fans in India, which was less than the manufacturing cost of the fans being manufactured in India. So eventually, the fans, like say big brand like Khaitan, Polar, and other, I mean, any name you talk about, most of them shut down their manufacturing capacity in India, and they had an arrangement with the manufacturer of China and started buying it from there. So the objective is to eliminate the this dumping. So create a level playing field where if you are a manufacturer in India, then you are able to manufacture and sell it at a price at which it is being imported. That is point one. Now to answer your question, once you see the dumping margin is determined by the anti-dumping authority after doing a proper investigation, then they recommend levy of the anti-dumping duty and a notification is issued by the government of India within the purview of the Customs Act only. So it is nothing but a customs duty. Now, to answer your question as to why, suppose the rate of custom duty itself could not be raised, and why there is a need of a duty in the name of anti-dumping duty. Is it your question that why not the duty itself be raised, the custom duty?
Precisely, sir.
So the reason is that India is signatory to the agreement of implementation of Article 6 of the General Agreement on Tariff and Trade 1994. Now, anti-dumping duty is levied, or the entire anti-dumping law, whether it is Section 9A of the Customs Tariff Act, or whether you talk about the rules, which is more, you see, precisely known as the Customs Tariff within bracket identification, assessment, and collection of anti-dumping on dumped articles and for determination of injury rules 1995, which is more properly known as anti-dumping rules. So both the relevant provision under the Act as well as the rule are framed in consonance with the agreement on implementation of Article 6 of the General Agreement on Trade and Tariff. That is point number one. Secondly, the anti-dumping duty is levied with respect to dumping from a particular country. So suppose China is dumping a particular item in India, then anti-dumping duty will be levied only with respect to China. If similar item is being imported from, say, any other country, say Vietnam, which is not dumping, then anti-dumping duty will not be levied with respect to import from Vietnam or say Bangladesh or say USA or France or any other country. So it is always specific to a country. So if suppose the general rate of custom duty is increased, then whether it is being imported from China or any other country, that custom duty will have to be paid on all the imports, irrespective of the country of origin. So always the anti-dumping, you see, notification within the purview of Customs Act is issued with respect to country of origin. What is the country of origin? Now that country, that the import may be routed through, say, Bangladesh. Suppose China smartly, what it does, that it, since there is no anti-dumping duty on import from, say, China, Bangladesh or Sri Lanka, then in order to circumvent the anti-dumping duty, they may sell it to any, you see, unit in China or sorry, Sri Lanka or any other country with which India does not have any anti-dumping duty notification. So always the notification under the Customs Act for levy of anti-dumping duty is issued with respect to country of origin. So whether I import from China, whether I import from Sri Lanka, or whether I import from anywhere else, if the country of origin of that item is China, I'm just giving an example of China, it may be any country. So that is how the anti-dumping duty is levied and a notification is issued. So I hope, I think I've been answered. Any other question on this?
Sir, uh, sir, I had one follow-up question regarding this, sir. Uh, Sir, if there is a company, the main company is located, it is perhaps located somewhere in Cayman Islands. The manufacturing
Correct.
unit of that particular company is in China. So now, as you said, the fact about circumvention. So what they do is, instead of directly sending their goods through China, they route it through, say, Bangladesh. So
Correct.
in such a case where the company is originally located at Cayman Islands, the manufacturing process is happening at China, and the good is coming at Bangladesh. What would be the goods of origin in this particular case, sir?
No, goods of origin, I mean, the country of origin is always the place where the manufacturing activity is taking place. It is not the place where the company is registered. So the registration of company may be in a tax haven. So that does not determine the country of origin. The country of origin is determined by the place of manufacturing.
So my next question would be, sir, in the last webinar, we have just touched upon as to what is like article. So
Right.
now, so my question would be, sir, firstly, what exactly are like articles, and can you tell us about those like articles in detail and explain how injury is caused to the domestic industry?
Correct. So you see the objective of like article. So first of all, understand the purpose of determination of like article. You see why the like article is to be determined, because the dumping or the levy of the anti-dumping duty is with respect to a product. Now I have to find out as to what is the product of export from China and what is the like article which is being manufactured in India. So in order to determine as to which industry is impacted due to dumping, unless and until I determine as to what is the like article, I cannot locate as to on what item the anti-dumping duty has to be levied. So this determination of like article is the most important aspect or the most essential aspect in order to determine the margin of dumping and other consequential things. So first of all, the like article has to be determined. Only then the domestic industry which is claiming injury due to dumping of article from any foreign country, first of all has to satisfy that they are manufacturer of the like article. Only then they can be an applicant for levy of the custom duty, anti-dumping duty, and initiate a process of investigation about the margin of dumping or the necessity of levy of anti-dumping duty. So like article is defined, legally it is defined in rule 2 sub-rule D of the customs duty anti-dumping rule. For short, I'm saying anti-dumping rule. I have already narrated the detailed and longest, the description of the rule. For short, I will refer it to as anti-dumping rule. So rule 2 sub-rule D defines like article, which means an article which is identical or alike in all respect to the article under investigation for being dumped in India or in the absence of such a article. So first of all, I have to find out the identical or alike article in all aspects to the article under investigation. But if that is not there, then another article, even though it is not alike in all respect, but has the characteristics closely resembling those of the article under investigation. Now, if it is identical or alike, then the job is easier. But the job is difficult. But if it is not identical or alike, but I have to find out that it is not alike, but it has the characteristics resembling to those of the article in the under the investigation. So there are various parameters. You see, not all of them cumulative, but independent. But we can use that to find out whether it has the characteristics closely resembling those of the article under investigation. So it can be commercial substitutability and manufacturing process, the use for the uses, the raw material and properties of the product, the resemblance in terms of the properties, even though there are substantial impurities in the domestically product like product. If the product is easily convertible, and such a fact is also recognized by the exporter. So if it is easily convertible also, so without much, you see, process, if it can be converted into that product which is being imported, then also it can qualify the definition of like article. And the difference in raw material is not decisive if the products are commercially or technically substitutable. So I think the most important criteria is that the commercial and technical substitution of the product. So you see, an illustration for an, and it is also possible that you see an article is being imported in a knockdown condition. So in that scenario, if they are segregated, then separate product control number can be issued for all the components, and even the component manufacturer can qualify the definition of like article. And now to give you further, you see, elaborate as to how we can determine the characteristics closely resembling to those of the article under in the investigation. One of the criteria which is often used is physical similarity. For example, similarity in size, shape, content, weight, appearance, taste, grade, standards, age, strength, purity, and chemical composition. So physical similarity in by considering any of these aspects can be determined. Then tariff classification also can be looked into. Then technical substitutability, whether they are, what is the technical specification and standard, and whether they are substitute of each other, what is the grade and purity. Then commercial substitutability, which means there any of these following criteria can determine whether it is commercially substitutable. Means we can look into whether the products are directly competitive in the market, whether they compete in the same market sector. If they compete in the same market sector, then we may say that they are like article. Secondly, what is the extent to which the end user can switch between the goods for reasons other than the price? So price may not be relevant, but to what extent the end user can switch between the products? And what is the extent to which the participants in the supply chain are willing to switch between the products? So not only the end users, the participants in the supply chain, for example, wholesaler, trader, and all that, to what extent they switch over between the goods. And willingness of the participants to switch between sources may suggest commercial interchangeability. Then how does the price competition influence consumption? And close price competition may indicate that they are commercially substitutable. So if price of one product rises, then instead of using that product, you start using a cheaper substitute of that. So that also gives you an indication that they are commercially substitutable. Then whether the distribution channels are the same. So the supply chain again, whether the distributors, the wholesalers, the retailers, and all these, the supply chain participants, whether they are the same or similar. Then packaging also sometimes can determine or the reveal whether whether there is any significant difference in the product. And another factor is functional substitutability. So functional substitutability means functionally they perform the same function. So they are substitute of each other. Whether they have the similar end use and to what extent the two goods are capable of performing the same function. For example, a shovel and a earth moving machine both can move earth. So they are substitute of each other. Then whether the goods have differential value. Since the quality claims are subjective, objective evidence like official standards, verifiable end user surveys hold high probability value. Then whether the end user preference is likely to change in the future, that can also be determinative. So I believe these are the important factors. So if I can go on and on, but I think it will bore our audiences. So let us switch to the next topic under the discussion.
Sir, I had a question.
Right.
Who can be the interested parties in an anti-dumping proceeding?
Okay. So broadly speaking, without referring to the relevant provision of the law, I'll tell you the relevant provision of the law also where the interested party has been defined. So in an anti-dumping investigation, interested parties are those individual, corporates or government with a direct stake in the outcome of the investigation. So if you are the affected party, whether you have a stake in the outcome of the investigation, then I believe you can be a interested party. So it can be a domestic producer, a foreign exporter, and an importer, and even the government of the exporting and importing country be an interested party. But you tell you the specific definition in the Indian anti-dumping laws. The interested party is defined in Rule 2, Subrule C of the anti-dumping rules, and it means an exporter or a foreign producer or the importer of the article subject to investigation. So exporter as well as the foreign producer. So I may not be exporter, so trader exporter. So I am buying it from the domestic market. Say somebody may be a exporter by buying it from the local market. So that exporter may be a interested party as well as the manufacturer, foreign manufacturer. Then importer of the article subject to the investigation for being dumped. A trader or a business association, a majority of which are producer, exporter or importer of such article. So the business association may be business association of the exporting country, business association may be of the business association of like article of importing country. So business association of exporting country as well as business of importing country may be an interested party. Then the government of the exporting country and a producer of the like article in India or a trader or a business association, majority of the members of which produce the like article in India. So any of these people, so domestic, in addition to this, I believe that the industrial user or the final consumer, even though it does not find its place in the definition of Rule 2C, but according to me, since they are affected by the outcome of the investigation, so even the industrial users or the consumer, final consumer. So if suppose the anti-dumping duty is levied or not levied, it will affect the consumers. It will affect the industrial users. So even they may participate in the proceeding and either support or object to the levy of the anti-dumping duty. So I think with this, I think we should end today's session. We have already discussed for about 25 minutes. If there is any follow-up question to today's discussion, then I will take it up and we'll carry it forward to the next week. We'll continue to discuss this topic because I believe there's not much literature or you see even the seminars or webinars which are done on this particular topic, and we'll try to discuss it as much as we can. Yes.
Okay, thank you, sir. And there's just a note for the viewers that the first part of the anti-dumping webinar, which we are conducting, it's available on sir's YouTube channel. So if
It is
you're
also
watching,
available on my LinkedIn
yes, it's
profile.
YouTube and as well as on sir's
Because
LinkedIn
you see,
profile.
primarily we are doing it as a LinkedIn live event, and then after doing it, we upload it. So since we do it as a LinkedIn live event, so it is automatically available in video form in LinkedIn live. If we don't need to do anything about it to make it available on the LinkedIn live, and subsequently it is uploaded on the YouTube also.
Viewers may access the first part of the webinar on sir's LinkedIn page as well as on his YouTube channel.
And I think they may also drop their questions in our YouTube channel wherever we are uploading this. So if you have any query, either to the first part or to the second part, or you want me to cover anything in the subsequent editions, I mean subsequent sessions, then you can drop in a query in the chat box of the YouTube channel or even in my LinkedIn page, and then we'll be happy to answer that. I would love that it is more interactive, and we'll all learn something out of it.
Thank you for today's session, sir.
Thank you.